Hey, welcome everyone. We
Hello.
are now live here at Emerging Valley, the online edition, April 2021. Thank you for joining us today. I expect many others will join us in due course. But we have, let's see, a clock here with 49 minutes and 21 seconds remaining. So we don't have a lot of time and want to get through some materials today. Also having a chance to have some discussion and questions and answers with people in the audience. So we want to make the most of our time together. This is not a master class, so we cannot. We can only touch a few issues, but don't stress. Don't worry. All the materials and many more materials are actually available on the Startup Academy, which you can find on VC4A.com. English and French, in Arabic, Spanish, in the language of your choice. So please go to the VC4A.com Startup Academy, and you can find these presentations and many others. Also, for any entrepreneurs that are actively fundraising at the moment, anywhere between 250K and 5 million. Also on the VC4A.com website, you will find the applications for the next VC4A quarterly deal day. This is for entrepreneurs that are looking to connect with the 500 investors that are part of the deal room format that VC4A organizes. So check that out. This session today is a joint venture, a collaboration between VC4A and our partners at Deloitte. So myself, Ben White, I'm the founder of VC4A, and today my co-founder, my partner in crime is he's the partner at Deloitte at the
Hello.
office Casablanca in Morocco, and is
Yeah.
also I think it was the head of financial services for West Africa,
Yeah.
financial advisory.
Yeah, correct. West Francophone Africa. Yeah.
So we're both very happy to host this session, and we'll also be welcoming our special guests. So we have Grégoire Parirac, who is our investor in residence from Orange Digital Ventures. Hello, Grégoire.
Hi Ben, congrats for your French.
Thank you. Yes, working on it all the time. And we also have our very own Amadou Dafe from the CEO of Gabea, calling in today from Addis Ababa, correct?
Yes, Ben. Thank you for having me.
Nice. So we have the investor and we have the entrepreneur to also add their perspectives to the conversation. We have first a few slides to set the scene. Again, just to touch on a few points. The presentation is in English. Feel free to ask your questions in French. Also, there is the chat. So throughout the presentation, feel free to leave your comments or your questions in the chat in French or in English, and we're happy to get to those. We'll have about 10-minute presentation, 30 minutes for our panel discussion, and then hopefully still 10, 15 minutes remaining for questions and answers with you, the audience. So without further ado, here is just an overview of the different points that we want to address as part of the presentation. One is to simply outline the process and the documents that are required as as a founder who is fundraising for the business. The stages of capital, here also looking at risk and control. Then, understanding the different types of investors, right? Not all capital is the same. There are many different shapes, sizes, and flavors. Some straightforward ways to make yourself visible. Looking at the team, the due diligence that you have to do on your own, on partners, fundraising failures and what would be attractive for a startup, from an investor perspective. And then we'll ask our panelists for their reflections. The process is pretty straightforward. The nitty-gritty, the details, of course, is something different. We can talk about that later. But it starts with a discovery, getting into a due diligence where the investor is trying to understand the dynamics, setting a valuation, right? There has to be a price agreed on by the founder and the investors, or the management team and the investors. There are the terms of the deal. How is it going to work? What are the clauses? What are the things to look out for? There's an agreement that is eventually signed by both parties in the closing, which sees the transfer of capital and is only the beginning of a much longer relationship, which could last anywhere between maybe 5 and 15 years. So longer than many marriages. That's for sure. And there's a whole host of documentation that you need as a founder or as a team fundraising, but most certainly your pitch deck, your business plan, and your financials, any audited statements, your articles of incorporation, your cap table explaining who owns what, who's invested what money into the business, under what conditions and terms, any agreements you have between yourselves, between key staff, partners. All of this documentation has to be available on hand and ready for review. The next slide, please, Julien. So the orange line, right? This is the journey that the startup follows over time, right? You're starting off with an idea or a problem. You're going into a period of investment where you're not making usually any money, known as the valley of death. And at a certain point, things start to make sense. You start to find your customers, there's traction, and you start to accelerate. And this is where the business wants to scale up and grow in its primary market, and then maybe even expanding into secondary or tertiary markets. You can look at this spectrum also in the lens of basically risk and control. So the further you are on the left side of the spectrum, the more risk there is, right? There's many things that still have to be figured out. There are many risks that still have to be addressed before the business is going to find its feet, to find its ground. The earlier you are going to find investors and to find partners to support you in your business, the less control you have in those conversations and in the terms that are being set. So the more you are able to set up and get running as a management team, the better your conversations are going to be, the more control or the more influence you have about the terms with investors. So all the way on the left end of the spectrum, you see there angels, the 3 F's, the fools, the family, and the friends, and seed capital, which can be from funds, can be social impact investors, can also be challenges, incubators, accelerators, moving into more formalized professional managed funds where you have your venture capital and your private equity. If we can go to the next slide. This is basically a breakdown of the more than 6,000 Africa-focused early stage investors that are part of the VC4A network. Here we know that more than 50% of the investors actively investing now in African companies have less than 5 years of experience. So there is still a huge learning curve, not only on the part of the founders, but also on the part of the investors that are putting money into these businesses. So it says that, it's a pretty dynamic space. There's a lot of things that are still being figured out. There's no fixed rules to any of this. If you look at the breakdown of investors in the last 5 years, we have seen this angel investor segment really emerge, where now it represents about 32%. This is a pretty significant, investment class that has really come into the picture just very recently. You have very distinct differences between an angel investor, right? Someone who is investing their own money, versus a venture capital investor who is investing on behalf of third parties. The way they think, the way they make decisions, their rationale for investing is quite distinct. And the same could be said when you're comparing angels and VCs to, say, for example, a social impact investor or funds that are being made available through an NGO, where they are much more impact driven, and maybe they're less focused on the financial return. They're more focused on what is the impact that you are creating or bringing about with your product or service or solution. Just to say that, not all investors are the same. And it's really about understanding who the right partner is for your business, and to what extent you're speaking the same language. And more recently, in the last 18 months, we've started to see more notable exits. The investors in this analysis, 34%, have been able to successfully exit their investments. If we can go to the next slide, please. So how are you going to connect with the investment community? Obviously, through sessions like this, we hope are helpful. Being involved in your local startup hub, participating in acceleration programs, targeting conferences and networking events, your competition startup challenges, also through your mentors. They have oftentimes extensive Rolodexes and can make introductions for you. And your local angel networks. If you haven't been talking to the local angel networks, that's the first place I would start. These individuals and these networks, they have access and they can help connect you as a startup. And then, of course, on the VC4A platform, we encourage you to register and maintain your venture profile, and so you can also connect to the opportunities and the capital that is connected to the network. If we can get to the next slide.
Okay, thank you, Ben. So here,
Yes.
This slide is to highlight the importance of the management team. The graph on the right presents the result of an investor survey. When we asked to the investors what is the most important factor when you decide to invest, quite surprisingly or not, quality of the management teams is the first factor before financial performance and market size. So yeah, the importance of the management of the company needs to be highlighted. And actually, it's not so surprising. At the end, an investment it's a bit like a wedding. So the choice of the partner is key. Okay, here. Yeah, we talk about the importance of to diligence your investors. By diligence, we mean take information about your investors, and to also to see if you succeeded in projecting yourself with your investors. So yes, here it's the summary of the key questions you need to a startup should raise before contemplating a capital opening. So first question: do you see yourself in their portfolio? Have you talked to other companies in which the investors entered? Do they understand your vision? Can they add value beyond capital? And can you see yourself managing differences of opinion and disagreement with the investors? So yes, this is probably the key questions you need to think about before opening your capital. Okay, after here is the main reason for a fundraising failure. So we can find the first one, team not complete, after valuation too high. So this one, if obviously valuation, it's obviously generally is it may be an issue for discussions. Business plan not deep enough. No commercial traction. No skin in the game. No previous experience for the entrepreneurs. No advisor, mentors, or investors. I think Ben already mentioned that. A lack of transparency for the company. It can be on financials or in terms of governance also. Poor governance documentation. Unwilling to make compromise. As we mentioned, compromise with investors is key because we can have different opinions, but after we have to face this. Poor legal, and also doesn't admit mistakes or learn fast enough. Again, it's a collaboration between an entrepreneur and an investor. So yes, obviously there can be mistakes, but at the end it's not a big deal. Just to face the mistake and move on. Yeah, the last slide here is what is an attractive startup for investors. So there are different aspects for the products and markets. Markets, obviously, investors will be interested by dynamic sectors with perspective of growth, not cyclical sector such as agriculture, building, etc. For the products, the positioning of the products in its market, how the products fits the market. So this is the main factors that will interest the investors. The entrepreneurs teams, I think we already discussed this one. For the legal, what will be interesting for the investors is to check if the company has the intellectual properties on these products, if the companies have the license for operating in certain sectors. They need they can in certain sectors some license are requested, such as in financial services, in telecom, or in healthcare sectors. So all these legal documents should have to be available for the investors. For the finance, the thing is to have probably historicals with demonstrated revenue growth. It's also to have a clear business plan with a vision, and also to in this business plan to demonstrate a profitability at the end. For a startup, the profitability is not necessarily requested for the historicals, but at the end, over the business plan period, the company needs to demonstrate a profitability. And for the last topic regarding the operations, the investor will be interested to see what process are in place, what is the ability of the company to attract or to find talents, and also the investor will be interested to see how the startup monitors its activity, what is the quality of their reportings, etc. Okay.
Thank
Ben?
you. Yes, I mean, this is just a brief overview, right? There's much more that goes into all of this. There's much more complexity, and it's fair to say that even people who've been doing this professionally for 10 or 15 years are learning all the time about new processes, new methods, new frameworks. So it's also knowledge that is constantly evolving. But we hope to, at least, sketch out the beginnings of a fundraising journey, and to highlight a few things that you have to be aware of. Again, these materials and many other materials are available all over the web, but also on the Startup Academy, available on VC4A.com. So please, the materials are there, but you do have to go online and seek them out. Feel free to also ask questions in the chat, so we can make sure that we are getting to the information that is helpful and useful to the people part of this session. And now we will welcome our guests, Grégoire and Amadou. again, Gregoire from Orange Digital Ventures, and Amadou, the CEO of Gabea. So we have a great investor and a great entrepreneur to share their experiences about raising capital and investing in startups, and to really give you that inside perspective, which is sometimes hard to read about on a blog. And really you have to hear it from the investor and the entrepreneur's mouth. But so without further ado, getting to Gregoire, maybe you can kick us off by first, being really specific about what Orange invests in. What are the countries? What are the sectors? What are the size of business? What are the dynamics of business that makes sense for you as when considering investment?
Yeah. Okay. Thank you, Ben. Just quick. We changed our name. Our name is Orange Ventures and no more Orange Digital Ventures. Just short comment. So Orange Ventures, it's a corporate VC of Orange. We behave like a VC, so we are not really a strategic investors. We are really a VC investor, and we are a 350 million euro fund, out of which there is 50 million for Africa. And in Africa, we invest into early stage startups, and we have two streams. A seed stream, and we invest into seed startup from 50k euros to 200k euros ticket in startups on the Orange footprint. So it's mainly Francophone Africa, in West Africa, Madagascar, plus Egypt. So it's in total it's 18 countries on the continent. And we have the other stream is Series A, Series B, across the continent without any limitation to the footprint. So we invested into in the Series A of Africa Stocking in Kenya, Yoko in South Africa, Gabea in Ethiopia, and we are very happy to be with Amadou here, and uVerify in Nigeria. So so what we are looking for is hypergrowth startup with a Pan-African vision and mainly tech-driven. So we are a VC, and so we can invest in seed and Series A, Series B. Is it clear for you, Ben?
For me, I hope it's clear for the audience. Julien, you want to welcome our founder?
Yeah. Maybe now let's start with Amadou. Amadou, can you just introduce yourself and tell us briefly about Gabea, about your product, your stage of development, and how much fund have you raised?
Yeah, so I'm not sure if I'm live. I know my voice is there, but I'm not sure if I'm live for the rest of the people. Okay, good. Yeah, so we raised $2 million last February 2020 for seed as a seed investment. Our platform is pretty much a freelance marketplace where we are trying to solve the problem of matching talent and businesses in Africa, primarily. What we've seen is there's a lot of raw talent in the continent, right, all over the place. But what's hard for companies is to actually identify those talents who are highly skilled, pre-vetted, affordable, with a great mindset. So that actual matching, that's really what we're working on at Gabea. So you could see us as between Upwork.com in the US and something like TopTal.com, right? Where we have a more community-driven model for our talent, whereby Upwork is a little bit more inventory model. You have millions of talents, sort of maybe 100,000 will actually deliver on work, whereby TopTal is a little bit more niche, where they have a lot smaller pool of talent, maybe 5,000 to 7,000, but with high pricing of at least on the rate of the talent. I think the average rate is $95, and then they're a little bit more sort of controlment. But Gabea is more of saying, we want to lead the sort of the industry of freelancing, at least at the professional services in Africa. And we based out of Ethiopia, our headquarters, although we have an entity in Kenya. We do have a strong presence now in Senegal, Hence why, it made sense for us to sort of have Orange as a partner to allow us to move alongside the map for wherever affiliates they have or wherever presence they have.
Okay, thank you, Amadou. And can you tell more, how did you approach your investors, and to what extent your networks and mentors help you?
It's a lot of dating and flirting. So this thing is emotional, but also is opportunities, right? Is the opportunity is there? When you talk about building a freelance marketplace in Africa, where everybody knows that talent is an issue, and you're based out of Ethiopia, the investors very quickly do the math, right? You see, okay, Ethiopia is a country that a lot of investors looking into, but it's very hard to do business in. But at the same time, the freelance marketplace can go pan-African. So logically, investors will see it. But then they dig in, right, later on, and they know the founder or the co-founder, and they realize, okay, these guys are capable of doing it. But then it gets emotional. It's a lot of sort of, back and talk. I think I met Gregoire first in Paris about 3 years ago. I think it was Afrobytes. He liked me, I liked him, we talked. Um, and then you keep on sort of just building your network pretty much. It's more being visible. You have to be extremely visible to these investors. They have to hear your story. It has to be unique. You need to be persistent. So that's really what gets you down. Once you have that interest, now you're like, let's look at the business. Then they look at your team. Then then they make you mad. They make you happy. It's a lot of dating and flirting initially, but then it gets more serious. So for me, it was more of saying, let me get out of Ethiopia and sort of make sort of noise and let people know that there's a company in Ethiopia that could potentially be $1 billion company, right? Market cap wise. So, and I also met people like Ben, right, who invited me to South Africa to sort of put me on the map. So it's really building that network. It's very important for every entrepreneur to start building that network early. That's the only way I think that made me sort of lucky enough to be able to raise money over, I think it took us about 1.5 years to raise. There was a lot of internal stuff that we needed to fix, of course, in the company that we didn't know, that I didn't know. But then once the deal was made, then things are working fine.
Okay. Yeah, actually, Amadou was Kabea was a venture showcase company. Was it last year or 2 years ago?
I think 3 years ago.
Time flies. 3 years ago.
2018. Yeah, end of 2018.
Unbelievable. Right. And those businesses have raised more than 143 million. So it's about, getting connected to the investors, being able to share your story and being able to spend time with them to really help them understand the business, because that's what, investors are trying to do. Gregoire, for you, I mean, when you're meeting, 2 questions. The first one, when you're first meeting a founder, what are you looking for? What are the signals that get your attention? What are the qualities that you seek?
Yeah, it's funny that Julien was surprised to see the team on the top of the list that investors are looking at, because it's really the team at seed stage, because everything depends on the stage and the maturity of the startup. But at the very beginning,
it's because I'm a financial guy, Gregoire.
Yes, but that's a common mistake, to think that VCs are financial guys. They love to date with entrepreneurs, and it's really about relationship. So the first thing I'm looking at when I meet an entrepreneur is first the fit with the investor, and then do we have a good relationship? Do we have trust and so on? Then I'm looking at the network, and you mentioned the network, because a startup cannot rise without an ecosystem, and the ecosystem is key. So we need to understand who are your mentors, on whom you are relying to grow, and how the team has been built, and how the team is strong all together, not only the founder or the 2 founders, but all the team, because it's a team game. So that's the first thing I'm looking at. and then obviously I'm looking at the execution. So what you cannot raise without a bit of traction. It's not impossible, at least in Africa, I think. So you have to demonstrate that bootstrapping you manage to do something, and something big, and which can be bigger, much bigger. That's the two thing. We are looking at the team. And when I'm looking at the team, just coming back on that, we are very careful about the level of ambition. And you need to have a great ambition, as Amadou said, to build a billion company. Now we have to say decacorn. But the idea is to build a great, huge company. So what you want to, it means that you need to, it's not just some words, it's a way of how you contemplate your project and your commitment on that project. The other thing is I care a lot about the quality of thinking of the team, how you build your ideas, how you demonstrate that your idea is the good idea, the best idea, and your strategy is great, and so on. And it's not only having good ideas, but just have special insights. That's very important for me. And then I'm looking at all the team together. Do we have one leader, a very good CTO? How the relationship works between the CTOs, the founder, and do we have a good complementary of skills? Do we have guys which is very focused on customers, and I care a lot about the fact that we care about customers, about marketing, about how to sell products, and I care a lot about the quality of the CTO, its capacity to find the best solution, to find advice, to find and more importantly, to attract the best talent in its team, because developers at the very beginning, the best developer are going to join the best CTO, and not so that's very important for me.
But Amadou also talks about that first part, connecting with people, that energy. Do we like each other? Is there a personality? Is the product, or the problem that we're trying to address, does it inspire a reaction? Once those conversations get going, he says, and then it gets tough. Then it gets serious. What is that serious part about? Maybe Gregoire, from your perspective first. When you found the company, you think you've got maybe an exciting investment. Now you're digging into the materials. Where does it get serious? What are the issues in the actual fundraising process that make it complicated?
Sorry, I was looking at the chat. Once we invest, what is where the challenge are afterwards? The investment
in the deal making part. So that you have that first the dating and the flirting, which I think we've just covered. Now we're into the deal making, where Amadou says, and then things get serious. What are we talking about? What makes this? You like the project, so you just put your money in it, right? Why wouldn't you be able to back a great proposition?
Yeah, it really depends on the stage first, and on the type of entrepreneur, on investors. When you, I think the most difficult part is this relationship issue. Once we want to make a deal, normally the deal is done. It depends at the end on the IC, and but if a partner is backing an investment, and its belief is the fact that this deal is a good deal, then it's a question of how to execute the deal. And sometimes for some investors, it's difficult to execute deals. Depends. So that's why it's very important to make your due diligence on investors. But then, so there is a due diligence, and sometimes we find some things. So some investors don't like to to invest time to help the startup to correct and to be more prepared to welcome investors and shareholders. But some agrees to help and support the entrepreneur to make those small corrections, and that's fair. And but when you have a partner who wants to make the deal, I think most of the job has been done. So when you were saying that, for instance, we invest a lot in seed now. We closed seven deals in 2 months at seed stage in Africa, and obviously when you invest 50K, 200K tickets, when you make a legal due deal, you have many things to correct and basic things. And sure, I think 100% of the startup for which we made a due diligence, the IP was not the property of the company. That's a basic thing. But for investors, you cannot invest in startup where the IP is not the property of the startup. That's something quite easy to correct just before the investment. It's just some paperwork. So that's not serious. When there is no issue about trust, frauds, and so on, there is no issue. We can close the deal.
Julien?
I think also maybe an important question for Amadou, a very practical question, but it will interest everyone here. Just how long did it take between the initial discussions and the closing and your closing the deal actually?
I think there were 3 phases. Yeah, the initial discussions took forever because my particular problem was my competition or the comparative. Right at the time we were raising, Andela just closed $100 million, which was mainly seen as our competitor in a sense. So you have a lot of investors sort of saying, oh, you like Andela, or how are you different? That's how the conversation went the whole time. So it took us too long to sort of get out of that. Hey, listen, I'm different. Let's compete, all those kinds of conversation. So that's really what dragged us out at first to sort of, everybody was scared of Andela, by the way, in that in particular thing. Once the company raised $100 million, it's a different talks. But then once people started understanding that the business model was different, Andela started having issues and so on and so forth, it was like, okay, then you're the second Andela. I wasn't too happy to hear that I'm the second Andela because I wasn't really looking at being an Andela. Then it becomes more interesting. So then I think it took us about 6 months now to get, a couple of investors who were serious. Now, what the magic that happened was the 2 investors got together and really wanted to make the deal. And that was Orange and Partech. Like Gregory's right. Once the deal is made, there's no backing out. There's just a few things now that needs to happen. So that 6 months period, went through due diligence. Our due diligence was a little longer just because, like Gregor said, there's some legal things you need to handle. For example, we didn't have a holding company at first. We had 3 different entities operating. That's really what was the bottleneck. I think if we figured that out initially, the deal would have been taken 3 months. But the due diligence of 3 different entities, the finance, auditing and all kinds of stuff that was just holding us down. And usually that happens at the seed level. I'm glad it happened. So, and I would not even worry about, like before I was worrying about deals being too long to close, but it allowed me to learn so much in that 1 year. So much to learn, to sort of understand how these things are. Because, I was a CEO, like I was an engineer, right? I was trained as an engineer and become a CEO. So there's a lot of things I needed to understand. So I'm actually glad that it took us 1.5 years to really, make a deal happen.
Yeah, and Gregor, maybe the same question for you, based on to your experience. What is the average length of a process between discussion and closing?
I think Gebeya helps us to learn a lot about how to invest in seed because we normally invest and our sweet spot is Series A, Series B, so we don't have those issues about holding and so on. It's already done. So it took a long for Orange Ventures to accept to invest in startup where everything was not at the standard we were used to. And so that's why we launched a seed initiative to invest into seed startup with another type of process, another type of we can accept other standards. And so GBA, it took a long to close that deal, but now we close a deal, a seed deal in 1 or 2 months, in 1 month usually. Well, we close 7 deals in 2 months to be so I don't know how to say it, but so I think when you are raising a seed deal, seed round, you need to look at investors who are used to invest in seed. Otherwise, you will hear every time, sorry, it's a bit too early for us. Very interesting, but too early. And you can pitch 100 investors saying the same. So make sure you when you are talking to an investor to make what you call the investor due diligence. It's very, very important. It's important to pitch investors to get feedbacks, and that's very valuable. But be sure that the one you are investing time and on the relationship and so on, and ensure that there are people who can invest into your startup. And that basic things to check. Do they invest in seed if you are a seed startup? Do they invest in Africa if our company is targeting Africa? I have a question on the chat. Do Orange Ventures invest in startup based out of France, Europe, or the US targeting Africa? Yes, most of investors investing in Africa are actually investing in holding out of Africa. And then but yeah, some basic checks, and then you can start the relationship.
Okay, but that question in the chat about, does Orange Ventures invest in a French-based company targeting the African markets? That also coming back to Amadou's point of having 3 entities in 3 different jurisdictions. How should entrepreneurs think about this? Does where they register matter?
At this stage, I would say not really. But that's something at the end which is very important to address. And the holding and where you should put your holding, it's a question for, I think, it's a question we have from every entrepreneur. Where should I put my holding? I think it really depends on the. So yes, at the end, you need to probably the investor would invest in startup where they think the place to put its money is safe. So it's very important. Not at this stage because the seed investors are okay with those risks, but Series A, Series B investors don't want to take that risk. So you need to have holding somewhere in a safe place and or a place which is attractive for investors. So if you are looking for investors in Europe, put your holding in Europe, and there are a lot of places which are very interesting for entrepreneurs to on the tax issues for having a holding. And if you think that you will have most of your investors will be US based, or I don't know, so you have Delaware, which is one of the biggest hub for holding, but it's not so easy to it's a bit expensive, Delaware. So it's very interesting on the tax issues for entrepreneurs, but there are a lot of legal issues which could be expensive at the end. So at the very beginning, it's easy and it's cheap. You can use Stripe and so on to set up a holding. But once you have to matter with legal issues, it can be expensive. But that's you need to benchmark the places and look at what the type of investors you're looking for and choose your holding accordingly.
We're already getting down to the last minutes. Maybe Amadou, you can also say something about what would you have liked to know, looking back? Would you have done anything differently? What have you learned from your process that you would share with other entrepreneurs that are starting out? Say they're 36 months behind you, or 2 years behind you, just starting their journey. What would your tips be?
Yeah, and I mean, I wouldn't change much. Like I said, this was necessary. I think this whole thing was necessary for a non-business person. I didn't have a business background before, to start a company from scratch dealing with finance. I don't think I would change much. The only thing I would have done earlier probably would have been, that's a very good question. Now. I may not have the answer right away. I think one thing I could just give advice on is networking. Don't stay in your bubble, right? Be bold enough to go and speak to an investor, so then you can learn from them. Even have investors as friends, right? Not every investor that says no, you just close the door on them, right? I did that. It was a mistake. But they give you insight, right? So have friends as investors, because if your ambitious is to build a company that's going to be multi-million-dollar company, $100 million, billion, you have to know how to invest. I contemplated at some point to go and get an MBA just to understand how, but that's not reality. The reality of investing in startup is something amazing. I'm reading, I've just finished reading a book called Blitzscaling. I wish I read that 4 years ago so I could see how I could do certain things, right? So it's more of discovery. This is really the fun part of being an entrepreneur. There's a really gruesome part of being an entrepreneur where you wake up one day, you say, what did I get myself into? But the fun part is really discovering. So I don't regret anything. I think that it was a price I needed to pay, made me a better entrepreneur. And I'm looking forward to have a new generation of entrepreneurs who know how to pretty much deal with investors. Yeah, that's about it, I think, from there.
And focus on execution. You need to investors are looking for teams who already manage to do something incredible, bootstrapping. But don't expect to do everything, to start everything once you have the money.
But maybe you can also say something about what the opportunity is for investors. Why should investors be paying attention to African startups when they can go to Asia or the US or somewhere else?
That's a very good question. So every continent already started their journey to on digitization, and so you saw Asia, Southeast Asia, India, and so on. And Africa is the last continent starting this journey. It's been 5 years that Africa started this mobile revolution and digitization, and we expect last year Africa raised 1.4 billion dollars, US dollars, and we expect the whole continent to raise something like 5 to 10 billion in 5 years time. So it's the last continent with such a growth on the digital, and we expect, and the exit are coming now. So we had Pestac, we had Wave, Send Waves. We have some significant exits which are interesting. So we think that this is still the best place for VCs to look at, because we expect such a growth with fundamental trends. We expect the demography in Africa, the metropole, and so on. But I won't list all the reason why we think Africa is a super interesting place for digital. I'm not talking about everything about infrastructure and so on. But I'm talking about digital. It's a huge place for investors. And
yeah. With 1 minute and 30 seconds left, if you're an entrepreneur out there building a company, you're tapping into an incredible future for the African continent, and you are the individuals that will shape Africa for the next 20 to 40 years. And I think if anything, you will find that there is actually a very dedicated community of hub managers, people running angel networks, people running business plan competitions, people like Deloitte working to offer services and support to entrepreneurs, to the investors who are always engaging in conversations like this, wanting to share their knowledge and their information and their network. So as a founder, you just have to beat the bushes, get out there, let people know what you're doing, share your story. And you will find a community of people who are waiting for you, who are eager to help you take the next steps. And we will most certainly see many, many more success stories coming up from across the continent, which we can all celebrate together as a community. So with that, I would like to thank you all for joining this session and for being with us today. Find these materials and much more on VC4A.com, and we will see you next time. Thanks, everyone.